really simple. When one of the leaders of the commercial real estate industry writes a seriously excellent article about real estate crowdfunding and then puts it up on one of the top real estate news websites and sends it out to all his subscribers and then makes what would otherwise be a paid subscription totally free to read the article, well, you immediately invite that fellow on your podcast. Hello, Adam Gower here, and my guest today is Orest Mandzy, Managing Editor of Commercial Real Estate Direct, whose website you already know, CREnews.com, now part of the TREP Information Solutions family. You'll find a link to the article that Orest wrote about real estate crowdfunding on the podcast page for today's episode at GowerCrowd.com. And what makes Orest stand out, as you'll learn today, is that he has built an entire commercial real estate information business online that he recently sold to TREP. And what's most remarkable is that he started this entire business online over 20 years ago. Not a newcomer to digital marketing and communication, Orest shares with you today his insights into how commercial real estate industry perceives crowdfunding, and what are the pros and cons, and what are the online best practices for investors and sponsors alike. He has more experience marketing and talking about commercial real estate online than anybody else I know in the industry. You can find out more about him on the podcast page for today's episode at GowerCrowd.com, where you can also subscribe to the free GowerCrowd newsletter, which is the only newsletter that covers news and updates exclusively from the world of real estate crowdfunding. Sign up there at GowerCrowd.com. And now, oh my goodness me, one of the most charming fellows in the commercial real estate industry today, a man who you have almost certainly learned something from over the years, one way or another, from his extensive coverage of the industry, Managing Editor of Commercial Real Estate Direct, Orest Mandzy. Here he is. Orest, I'm so happy to meet you. You wrote this amazing article. First of all, I could never write as well as that, but I couldn't have written, even if I could, I couldn't have written as well as that thing about crowdfunding. I'm so happy you did that. I'm so happy that you're here on my podcast today. Thank you so much for joining me. Tell me first who you are.
Okay.
What you do and for a living, and how long have you been doing it? To kind of give me the background. Who are you?
All right, great. Adam, I'm blushing. And thank you very much for those kind words.
My pleasure.
My name's Orest Mandzy. I'm the managing editor of a publication called Commercial Real Estate Direct. We're owned by a data analytics company called TREP LLC. They have a massive database of bank and CMBS data specific to the commercial real estate market. I started Commercial Real Estate Direct 21 years ago, and almost 7 years ago, TREP acquired us. Prior to those 21 years, before 21 years ago, I was the managing editor of another publication called Commercial Mortgage Alert that tracks the commercial mortgage business. And before then, I was with Real Estate Alert, another industry publication. So I've been covering commercial real estate for 32 years, something like that.
I like to say that I've been in real estate since they built the pyramids.
Yeah,
I can't remember how. It's too damn long. I can't remember.
If the SNLs, if the SNLs financed them, then I was there.
You were involved. All right, so that's the 90s. All right, so that's the 80s and 90s. Right, it's a long time.
Right. Mm-hmm.
So is Commercial Real Estate Direct, how would you characterize that company that you built? Is it a news organization or is it data aggregation and analysis?
Okay, so we do some data aggregation, but we're primarily a news and information site. So we're a subscription-only service. We have a low tier where you can see our headlines and download some stories. We maintain a database of. We've been tracking property transactions, property sales. So we maintain a database and we make that available to some of our upper tier subscribers. And we also track a lot of the CMBS market, new issuance, how much volume gets done, loans that go bad, we track, that sort of stuff.
Oh, interesting. And this is Commercial Real Estate Direct, is it?
That's correct.
That's what you started doing 100 years ago and was acquired by TREP.
That's right. And TREP has a proprietary database of CMBS loans. So, and it's very, very granular. You want to find out who the biggest tenants are in the New York office market. You could find out through their database what the delinquency rate is of specific types of loans in specific geographic areas.
I see. Okay. So, and your background is exclusively commercial real estate, obviously.
That's right.
Yeah.
That's right.
Now, you and I met because you had expressed an interest in real estate crowdfunding.
That's correct.
So give me a sense first of who your traditional audience is at Commercial Real Estate Direct. Like, who reads your journal?
Sure.
Who is your ideal avatar? And then let's talk about the interest in crowdfunding.
Sure. So our subscribers tend to be, well, they're all commercial real estate professionals. That entails investors, brokers, lenders, the institutional investment managers, asset managers, I already said brokers, service providers, and things like that. We like to track, our sort of focus is tracking the capital markets. So where's the money coming from? What are its terms? And who's getting it? What asset classes are in favor? What geographies are in favor? So crowdfunding is fascinating because it's filling, much like what happened after following the S&Ls. The S&Ls created, or their departure created a vacuum for middle market lending, and that's where the CMBS market stepped in. So you had this, and I learned this from reading your book, which is an outstanding book because it was a quick read. Maybe it's not the same kind of void, but the syndication market kind of is being taken over by the crowdfunding market. It's a more transparent market, more efficient market. It appears to be, and the data seems to sort of reinforce that, in that it takes folks are able to invest in a much more efficient manner than they used to before through the old line syndications.
So that's fascinating to me that you would say that. When you say crowdfunding is a more efficient form of syndication, just kind of explain what you mean by that.
Well, so say I'm developer XYZ and I'm looking to raise $20 million for a $100 million project or something like that. In the olden days, I go through my RIAs, the registered investment advisor, or whatever network I have in place, and I'm seeing the same folks time and again. Through crowdfunding, put it on whatever site you want, and you're going to get exposure to investors you had never heard of before. So you're able to diversify your investor base. The investors themselves are able to diversify their investment base. So it's kind of a neat thing. And the as you know, because you told me through your book, the growth of crowdfunding has been astronomical. I mean, who'd have thought that in 4 years you would see the level of penetration that you have?
Well, it is extraordinary. I mean, this one data point blew me away. I mean, when we actually first started doing the analysis, Orest, I wasn't sure if we'd get anything readable out of it. We downloaded a million data points and started playing with relationships, right? A number's worth nothing. A number is meaningless unless it's divided by another number, right? Basically. So we started looking, and suddenly these things started to emerge out of this huge data source. And the biggest number was the growth from 7 billion in 2019 to 15 billion crowdfunded in 2020. I mean, it's just mind-blowing during a pandemic.
Yeah. Well, I wonder how much the pandemic helped that. Folks were basically, for a period of time, everybody was sitting at home looking at computers. So as opposed to visiting with the promoters or the sponsors or what have you, there was, there wasn't that much sort of face-to-face that might have forced people to become more comfortable.
Well, that's exactly the point, isn't it? Yeah, I mean, that's exactly the point. And in the course of your career, you've seen the change in the way media is consumed. When you started,
Yeah, yep.
right, you presumably you must have sent mail out, right? You printed, I don't know what did you have? Did you have one of those photocopiers that was purple, had that great smell? What was it in the early 80s?
So it's funny. So when we started this 21 years ago, we were launched specifically as an online platform. So we never printed anything. But where I had worked before, Commercial Mortgage Alert and Real Estate Alert, those were newsletters. So they were printed every Friday, and they were, put in envelopes and mailed or faxed to our customers. Right. So we figured out, let's jump on this. I wasn't as smart as Jeff Bezos, because I figured, who's going to buy books online if I could go to Barnes and Noble?
Is that crazy? Yeah. Well, so the reason I asked that, just for you to reflect upon your own history, is that what the pandemic did was it accelerated an existing trend. This trend to commerce online, which we've seen in every other industry. It's like, it's not something that we're not familiar. I mean, you mentioned Amazon, right? I mean, the richest man on earth, whatever. It's all online commerce. It's just not yet really come to real estate capital formation until 2012, when crowdfunding was legalized. So it's an acceleration of a trend.
Yeah, that's right. We were, and I hate to sort of like compliment myself, but we were, among commercial real estate publications, we were pioneering in developing an online only model. 21 years ago, a lot of folks, commercial real estate professionals, still weren't very comfortable in getting content from a website. It was, if you're getting information from anything on the internet, it was bogus. It was a bunch of yahoos on.
You can't believe, you can't trust it. Right? It's not in the paper. You can't trust it. Exactly.
Yeah, it was fake news before fake news became a term.
So so you were really, really ahead of the curve. Tell me something more about, just kind of cast your mind back. Were you like one of the tech, the .com startup era? Yes. Kind of just describe that.
Exactly. So, and I can't take full sort of credit for this, but there were a bunch of folks who had started a company that was going to provide news and information on a number of verticals. And they were venture capital funded. They hired me to start a commercial real estate platform. I started it. They ran out of money and said, we had already had subscribers. We were cash flow generating. And I said, well, you net present value, the cash flow stream that we were generating, this is what it's worth. I'll give you this much money for it. And I bought it. So we were like whatever that the sock puppet was. It wasn't Petco, but it was one of those early internet companies that didn't survive. But we were kind of
You had a business, but you actually had a business that made money. I mean, the ones that didn't make money were those that were just trying to grab market share. So tell me something about the growth of that, and what was the value that you were providing to your readership that warranted that they saw it, there was enough of it that they wrote you a check every month?
So we and in commercial real estate and in a lot of industries, it's you develop a reputation. So I used to talk to a lot of people on a regular basis. They knew me and they got very comfortable with my sort of ability to write honest news and information. I would provide them sort of genuine stuff. This is what happened. XYZ bought this property for this much money. They got financing from this party. This was the cap rate and whatever. And they trusted me. So we were able to sell them subscriptions. And based on the fact that they were comfortable with the information that we were providing. And it's, if you try to sell junk, eventually it's going to hit you in the face and you're not going to sell much of it.
Right.
We've always tried to sell the best information you could find at our price point. Well, best information you could find, period.
And how did you identify what it was that people wanted? Was it intuitive to you that you thought, oh, the people would want this, or did you ask them, or how did it come about? The type.
So a large part of that is because I had been doing this for so long. For the prior 10 years, I've been covering commercial real estate. I knew who the users of information were and what they were looking for. So it was kind of, I don't want to say it was easy to craft a product to fill their need, but I was comfortable that we could create a product that fit what their needs were. And I think our longevity has kind of proved that out.
Fascinating. And you've got me my head is spinning now. I'm constantly trying to figure out other avenues to expand my own business.
But our goal is, how do we grow, right? So, commercial real estate is still a relatively small market.
What is a small market?
Well, it's multiple trillions of dollars, but it's what our growth potential is. We believe it's pretty big, and we're only scratching the surface because there are a lot of we cover national news, right? We'll cover something here's a headline in Queens, New York, and then we'll cover something in Hartford, Connecticut, and Los Angeles, all over the world, all over the country, rather, not the world. So if maybe the void is, well, these developers in North Carolina might need information that we could sell them, but how do we package our product to fit their needs is the sort of the $60 million question.
All right. Now, you talked about syndication. So, and you described crowdfunding as being more efficient. Was syndications something that you tracked in terms of volume or any kind of analysis?
No, it was more very anecdotal stuff that we would, XYZ developers buying this property, and so they own 3 properties, and all of a sudden they're paying $100 million for this new property. Where'd they get the money from? And so, you talk to them or talk to folks around them or folks who might need them, might be familiar with their operations, and, well, they're raising it from high net worth individuals, family offices, and other smaller investors.
Right. So it was strictly, well, that's exactly what it was, Orest, wasn't it? It was this world of isolated clusters of people all over the country that only knew what was happening in their location. Bingo, and couldn't see anything else. That's exactly right. That's right. Basically what has changed fundamentally. With crowdfunding is that now, I know how much is being invested in any city, in any location, at any time. Through crowdfunded syndication. I mean, there's still this non-crowdfunded, kind of closed door thing.
But those non-crowdfunded syndications are becoming a smaller slice of the pie.
Yeah. I mean, yes, exactly. Now, are you, apart from the conversations you and I have you seen that anywhere else? Have you seen signs of that, or even anecdotally, are you coming across that in your world?
No, not at all. In fact, that's why I was fascinated by your data. I was totally blown away by it. That this relatively new technology, basically, or totally new mindset, more or less, as opposed to technology, is taking over the market by storm.
It is fascinating. So the world that you live in, and I asked you about your audience a little earlier. When you think about that audience, what do you think is their perception of crowdfunding? Like, what is the reputation, and how do people see it today?
I think it's getting more and more accepted. And it's hard to say whether it's slowly being accepted or it's quickly getting accepted. I think the latter. I think they're more inclined to embrace crowdfunding. Early on, maybe less than 2 years ago, I spoke to a sponsor, to a developer who had crowdfunded some of the equity they needed for a transaction, and his takeaway was, it was great because we got access to investors we never would have touched before. The problem was it took a while to close. So he was able to close with his regular syndicated clients in a matter of a couple of weeks, and it took 5 or 6 weeks to close through the crowdfunding. But I think that lag is going away. This morning, CrowdStreet announced a transaction. They raised a ton of money. I think it was $15 million for a transaction.
Yeah.
Which in no time at all. Which is 2 years ago, you'd have said you can't raise that in 3 years. And they did it in like 20 minutes or some ridiculously.
I know you kind of almost say as though it's unbelievable, but I actually, we have a client that did a raise on CrowdStreet last summer. It was a $20 million raise, and they announced the raise halfway through a webinar. And I was sitting there looking at the amount raised button or the indicator on my screen behind the scenes. And it went up to 15 million in the first 15 minutes. And I kept sending emails to the guys who were doing the live webinar. And afterwards they complained, said, don't ever do that again. It was too distracting. They couldn't believe what was going on.
Now, what for that to happen, because we still hear about deals where a syndicator gets accused of creating a Ponzi scheme, fraud and stuff like that. So what the sort of the CrowdStreet that occurrence tells you is that people have gotten very comfortable with that. That they're more comfortable that they're getting the right information, and they're geting enough of the right information.
All right. So actually, it's interesting you say that, because I was just about to tee it up. You have come across crowdfunding recently. And just like as most people, I mean, your audience, people hear about it a little bit. They're not really sure. I can tell you in my world, as big as it's grown, people that contact me are crowdfunding curious. That's the best way I can describe it. They know something and they're not really sure, but the gap between what they do know and actually delivering to it, actually engaging it, is really huge. Right? And they do have negative perspective or perceptions as well. So you've described the positive. It's much more efficient. You can go to it, et cetera. But what are the cons as you see it?
Well, we'll go back to before the global financial crisis in 2008. So TICs, tenant in common groups, were quite popular in small groups that are trying to execute 1031 tax deferred exchanges. Those went away for the most part. A lot of the deals were, they were technically very complex transactions because each tenant has an equal share of title. Right. So if one tenant decides to file bankruptcy, the entire group is then stuck in that same bankruptcy. So lenders avoided lending to them, but a lot of them went belly up because of capital calls. That was one of the issues. That if the property needed more capital, one of the tenants could say, "Well, I'm not investing anymore," and that would blow up the whole deal. That's gone away, but issues like that where less than institutionally sophisticated investors are involved, you might have issue. I don't want to call it fraud or anything like that, but you might have problems with the investors themselves where they might not be aware that. And I'm not to say that this would happen in a crowdfunding transaction, because each deal they might be structured as LLCs, and there might not be a mechanism to call additional capital or anything like that. But there might be trepidations about that.
Well, you've touched on it, really. I mean, when you talk about fraud, that's something that every industry, there's fraud everywhere. There's nothing there's nothing you do about it. If somebody's deliberately acting, is being criminal. That's a hard thing to. So we're talking more about the kind of the way that this new industry is growing. At least I think of it this way. It's the way that the industry is growing and it's evolving. Actually, very little regulation. In theory, There is regulation, but it's not really in terms of the types of fees that people charge, the way they underwrite. There's no rules and regulations for this is how you conduct a real estate deal. And so when you bring individual investors in who don't have experience of commercial real estate, do they really know what they're looking at?
Yeah, that's a great point. And I expect that they've gotten very comfortable. The folks that I've spoken to, the crowdfunding platform people that I've spoken with, they understand that that's the risk, that investors are going to feel that they got ripped off, or if we promise them a 6% return and we only deliver 5% return, they're not going to invest in other deals. So they're very, very cautious about making sure their investors are well educated in their deals, as opposed to, they don't all have to have PhDs or anything like that, but that they're well educated in how the deals function, what to expect, and what the risks are. And I've sat through a couple of webinars. I've read through offering memorandums, and they're very, very thorough. And they're written specifically for individual investors, as opposed to institutional investors that might have invested in $2 billion of real estate and stuff.
Well, those are professional investors, a very different caliber.
Yeah, that's right. So I mean, folks like CrowdStreet, Realty Mogul, Fundrise, they've gone out of their way. This is because they know that this industry is still in its infancy. They could blow it up, or they can make it very successful. So they're doing whatever they can to make it successful. So far, I don't think there have been a couple of instances of crowdfunding platforms that have gone belly up. Realty IQ,
Realty Shares, yes, Realty Shares, right. Okay. But they went to, that's interesting, and too much perhaps for this podcast, but the reason that they went under was kind of similar in a way to your experience of the venture capital world. In your case, the VC, they decided not to continue funding,
right?
So you bought them out. And in Realty Shares case, they wanted an exit faster than the company could provide it, and so they decided not to fund. So it wasn't crowdfunding and real estate crowdfunding per se. It was the way that the finance had been layered on top.
It wasn't product related.
No, it was the financing, which is what tanks real estate deals as well. It's not the real estate that's bad; it's the way it's financed, or the over leveraging or whatever. But you touched on a very important point, and it is a point that is core to your business, to your life as you've described it. That is the idea of educating people online. So tell me something that you've seen and the way that you view education online, particularly. What are best practices? What have you seen are best practices for doing that?
It's in a word, transparency. That's the secret sauce. And I know each platform is different, but so they'll provide you sort of a business plan with pro forma data and things like that. And some business plans are far more thorough than others. But they'll provide that to investors. But they'll call up the prospective investors, ask them if they have any questions. Someone might have a different understanding of certain data points, or they might question, how did you get to this 6% increase in pro forma rents? How do you justify that? And that's where a human touch comes in. Here's how we did it. The market's improving. Amazon's building a warehouse next door, whatever the case might be. So it's I'm sure the crowdfunding platforms spend a lot of time and a lot of time hand-holding with their prospective investors.
Well, you and I talked about this the last time we spoke, and that was the idea that that you are educating. I totally lost my train of thought. I'm thinking about too many different things at a time. Let me jump from that because I did lose it. I was actually, the question I had on my screen was, do you think of yourself as being an educator?
An educator, huh? That's, well, I have 3 kids. So I naturally have to be an educator, even though they're out of the house and off the payroll. But
in terms of your work, though, Orest,
yeah, I think so. I look at it that way. I mean, so when we're reporting a story, it's write it in a fashion so everybody can understand. If someone who's reading it can't understand a certain point you're saying, you got to rewrite it so they do understand it. And you have to understand it so well that you can explain it to a 5-year-old. Well, maybe not a 5-year-old, but so you could understand it, so everybody who's reading it can understand it. So it is kind of like I guess that's an education trick.
That is interesting, and that's even to your professional audience.
Yeah, that's right. Because so even though we're writing, our audience is a professional audience, and it's comprised of folks in the capital markets. There might be brokers, there might be service providers that if you say something that's very familiar to the brokerage community, it might not be familiar to the servicing community. So, or vice versa. So it's incumbent on us to explain everything in a manner that everybody can understand it. It also acts as an insurance policy that we know what we're writing. If we use an industry jargon and not really know what it means, we might be fooling ourselves and sort of deluding ourselves into believing one thing when it's the other.
Well, someone will call you bluff on that if you try and bluff it, right?
That's exactly the point, and that's the most embarrassing thing, and it destroys your credibility.
Exactly. So how many writers do you have, just incidentally?
So we have 4 in-house.
Okay.
Very small operation.
But 4 people can pump out a lot of content.
We're highly productive.
Yeah. Oh, no, I know that. You know, we have a team of writers, and I know we're a production machine. I mean,
yeah. And the more you do this, and not to say that it's all repetitive, but you know, XYZ buys a property and then ABC buys a property. Well, same.
Right. Search and replace names, right?
But there's nothing that irritates me more than that. The mantra is every story is unique. Make it so it's unique.
Hey, what are the biggest trends that you're seeing in online media? Like, where are you headed with Commercial Real Estate Direct in terms of delivering media?
So we recently revamped our website. So one of the questions you had asked me before we came online was, have we seen any changes in terms of pre-COVID to post to now in terms of viewership? And we changed our website, we revamped it, and the tech guys did a lot of back-end stuff, and our readership online has skyrocketed. But the metrics might have been measured differently, so it's kind of, the numbers are like up by 100%, if not more. But it's how we're being presented and things like that.
Well, now all I want to know is exactly what did you do? That's the secret.
Yeah, I see.
No idea, right?
And I'll ask the tech guys, and they're going to tell me, and I'm going to come back saying, I have no idea what they said.
They're going to tell you entirely in jargon. You'll have no clue. They're shamelessly going to use jargon.
That's right.
Just so you never figure it out. All they did was actually plug it in at the back. You didn't realize that it wasn't plugged.
I'm sure it had something to do with how how our stories were being indexed by the search engines. But it would be so a lot of the biggest operators in commercial real estate subscribe. Whether they've increased usage or not is kind of the question I'd like to get answered.
Interesting. All right. Tell you what, Orest, you and I could talk for a long time. We've been talking already for a while. Let me ask you 3 sign-off questions. I hope I sent them, and forgive me if I didn't. I don't think I did. 3 sign-off questions I ask all my guests, and then let's just chat a little bit offline before I say goodbye for the end of the day. 3 questions. First of all, what are your daily habits that keep you successful and productive?
So I go to the gym every day of the week. So I swim 3 days a week, and I lift weights another 3 days a week. And so not every, and then Saturdays I'm off because I'll sleep in until 7 o'clock. So I go to the gym before I come into the office. So before I come into the office, I read the Wall Street Journal, and then I hit the books, basically. And that's what keeps me productive. I'm full of energy in the morning because I've just come back from the gym. Also, I'm a cancer survivor, by the way. Last week was my 2nd anniversary for completing chemotherapy. Wow. So going to the gym has been both a psychological and a physical boost for me. So it's it helps focus. It helps me stay focused and stuff.
Very nice. Thank you for sharing that. Second question. What's been the hardest lesson you've learned? Normally I ask what's the hardest lesson you've learned in real estate, but in real estate or in business in general throughout your career?
Hiring the right employees. Hiring is probably, having owned this company for 21 years, for almost whatever it was, 16 years. Well, even now, because I'm still in charge of hiring for our staff, hiring is the hardest part of running a business. It's, you hire someone and, you don't know if after 6 months if they're the right fit or not. And then, by then you're too vested in them. So that's to me, that's been the hardest part of running a business.
So what advice would you give to, it's not my third question, I'm adding a question. What advice would you give to somebody who is trying to hire? Like what's the lesson learned? Yeah.
So I think the lesson that I've learned is in the interview process, don't ask so many questions. Leave the questions to the interviewee. Let them ask you questions. I think you get more information than the other way around.
Sorry, I'm just throwing things at my dog for bloody barking in the background. In other words, listen, right?
Yeah, that's right. And then push them to talk.
That's interesting. Last question. Somebody, let's say in your audience, who really hasn't heard of crowdfunding, or is reading this article that you wrote the other day on crowdfunding, and is curious to learn more, or is interested in investing in a crowdfunded deal or raising money using crowdfunding, what advice would you give them?
I would say register on each of the sites, each of the major sites. Just by registering, you get access to what their offerings are. And then if you sort of pass muster and they accept you as an accredited investor, you could download the offering memorandi and things like that. That's a great education process. And each one of them has available, once you're registered, available sort of information courses and stuff like that. So you get a lot of information. I've learned from them.
Yeah, it's actually my primary source. I subscribe to every newsletter, every email, everything. I subscribe to everything and scan everything. That's actually how we put our newsletter together, is we just consolidate the highlights and put it into a brief newsletter, all about crowdfunding.
Yeah.
Orest Mandzy, Managing Editor, Commercial Real Estate Direct. Thank you so much for being on the podcast.
Adam, it's my pleasure. Thank you.
That was Orest Mandzy, Managing Editor, Commercial Real Estate Direct. Be sure to read the article on crowdfunding that he wrote and take advantage of the free subscription to CRE News by going to the podcast page for today's episode at GowerCrowd.com. Scan down to the bottom, you'll find a link directly to the article on CREnews.com where you can read it at your leisure. Plus, while you are there at GowerCrowd.com, if you want to access deal information and pictures from sponsors on deals actively being promoted. Plus, if you want to access all the latest news from the real estate crowdfunding industry, and if you want to be first in line for our special educational materials on real estate investing and capital formation, subscribe now to the GowerCrowd newsletter at GowerCrowd.com. It's totally free, and it's the most comprehensive source of news and information about real estate crowdfunding anywhere on the planet. All there at GowerCrowd.com. Thank you for joining me today, Orest Mandzy, Managing Editor, Commercial Real Estate Director. Thank you for listening in. That's all for today. Be well, stay safe, and for now, this is Adam Gower signing off.